The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Wednesday, the 13th of July. We're almost mid-month. It's amazing how time is flying here. Let's go to the Dow. The Dow is, let's go to the Dow. I think I just typed it in the wrong place. Dow right there. Uh-oh. There we go. Sorry. INDU. A lot of action in the markets. Maybe that's why it's a little slow. There we go. Dow's at 336 at 30,640. S&P down 43 at 37.75. QQQ down 3.44 at 282. That's the NDX 100 trading vehicle. IWM Russell 2000 small caps down $1.77 at 169.70. Gold was down and now it is still down 2.5 at inlaid E to the downside in the Chapman wave methodology. We're going to go through a bunch of these things in a little while. We're watching this very closely because I had here the left side, right side price time match for the gold, and that was from the low that was made right here. There's a continuous contract, so that price is always fluctuating, but the patterns and the lettering is always the same. But the low that was made at 1691.9 on the week of the 13th of August got tested this morning at 1704. Well, it didn't get tested. It didn't break 1700. To go to 16, but it is there. For the left side, right side price time match, what I showed, the Chapman wave inside wedge target resistance line hitting today. So we've got another 1 week to go to see whether or not that's going to be hit. But this is, I'll keep it as a weekly chart. Look, here's the dollar. The dollar is trading, look at that. Leg D on the upside, spectacular move. MACD is good. Stochastic is very strong at 88%. 9 is way above the 14. So for the dollar to, I know I've had a couple of messages saying dollar is about to really tank. And all I can say is I can see it pulling back. There's just no question that it's becoming a little bit overbought. A little bit overbought because based on the technicals, there's nothing here that says there's an aberration. The previous high of 102.99, I've got to check to see if there's 102.99 because this is the index. This doesn't change price. It's not a continuous contract. It's actually an index. Way back, that was the high of the week of the 20th of March 2020. That's key support. It's a big deal. 6 points from where we are down to test that old high when you've broken out here so many times above that level over the last 4 or 5 months. That's really important. Okay, so let me go to show you while I've got the weekly chart up. Let me show you the comparable inverse pattern, like a mirror image of the euro. Euro trading down at 1.003. We're looking at it breaking below the 1.0636. That's the one that does change. So let me just double check that that's the 1.06364. All these numbers, it's just like, why did they do that? That was the week of the 27th of March 2020. That was the day we got that buy signal in the Dow, which we're still holding. Yeah, so let's just go back to this. And this is leg D to the downside, but you can see the 9 period is way below the 14 period moving. This is the weekly chart of the euro-dollar currency pair. The MACD is deflected lower, so the histogram's very negative. Stochastic's down at 13%. It has a chance to go to single digits, but it is declining. So far, there is no turnaround in the euro. There is no turnaround to the upside in the euro. There is no turnaround to the downside in the dollar. And if you do the USD JPY, which is the dollar yen, we've just made a new high in the weekly. And now I have to call this a leg F. It might be an F/B. I'm being conservative and calling it an F. And that in the Chapman wave says it's gone way above the 300% extension. I call this a Fibonacci, but in fact, there's no 300%. I just put it in here, 300% extension. MACD is good. Stochastics 92%, but flat. That's okay. and the 9 period is way above the 14 period moving average. To get the yen, the dollar yen, to become a sell signal and then a sell mode, you would probably have to see, it's at 137.85 right now, up 0.99. You would have to see it below, trading on a weekly basis, below 128. That's 9, maybe 10 points lower to get that all in sequence. That's going to take a while, or it's going to take some news that is just devastating to the dollar and just fabulous for the euro, and that's where I think gold will start to move higher. So now in the meantime, we've got the daily chart, which is calling this an A, gray A, because under the previous high, calling that now a B, and this is a C, but I have to say it could be a G/C, very positive in the daily, but the MACD hasn't crossed positive, and the stochastic is only at 80%, so I do have to be a little cautious and call this G/C in the Chapman wave methodology. And the only reason I'm doing that is because I like to be ahead of the game. I don't want to call it a C saying, oh, it's got to get to a D, when in fact right here is where if the MACD deflects lower because the Japanese yen starts to pull back, I want to be ready for it, and I have got it as a potential peak, a leg F in the weekly, a leg E in the monthly, and remember the dollar is a leg C in the monthly. I could use alternate accounts. I don't really see why that's necessary. Let me just show you that right now, and then I want to go to a couple of things. I want to talk about the market, positions, etc. DXY, there it is. Look at this. This is the dollar. It's broken to a new high in the 120-minute chart. Just for now, I'm calling that a G, saying, yep, we're real close to maybe, it's not yet an A, it's a G. The bar that makes the low cannot also be the high, except if it's a Chapman wave instant restart. So this I have to call a G. There's nothing else. There is no A yet until it goes in the next bar above whatever it's doing right now. Okay, so that's the dollar. A couple of things. So I was asked, I'm going to go to the TLT. I'm jumping around today. I need to see the close, so I'm just biding my time here. We do have some positions, our long positions so far. The stock positions that we've added to are actually doing very nicely. We did get stopped out of our other positions. We did have a position in the ARKK. We've done very well in it. This last position took a small percentage loss. I'm looking to see, do we get back in? Do we just stay out? And the TQQ, which we had, which is 3 times long, the Qs, we did really well. And this last little bit just got taken out, still for a gain. So we've done very nicely. I'm treating all of these as trades. We've built up a huge cash position for subscribers to the opening call, my newsletter. And I'm putting it to work. I think there are positions that could be long positions, and you've just got to be real careful. Got a couple of questions that have come up. I'm going to deal with it right now. First of all, I want to go to one that I had 3 days ago, and then I forgot to look at it, and I sent a note to Jason to say, I like the action. It's just a little bit choppy, and that was GTLB, which is GTLB, developers, trade about and TBT relation.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back. Basil Chapman. This is the Tiger Technicians Hour. 404 down in the Dow, 47 down in the S&P. This is going to be a struggle. This is going to be a fight. There are a couple of things that are going on here, and one of the reasons why I tightened up the stops everywhere, and I said, we've got cash. We've done very nicely in this short-term period where we've gone long, sometimes 3 times long in certain positions, but always treated as a trade, trying to put some core money to work in some positions, but very selectively, and that's going to remain the theme right now. So the question about GTLB trading at 53.13 down $1.10 is that I love when I see stocks that have held very well in this environment. And it had 137 round number high back in November of 2021, software for developers, GitLab Inc., A shares. And then it took a little tumble and it tumbled down to the 30 area. And then it ran up to 60. I would say 30 to 60. I'd pretty much call that a double, wouldn't you? Well, at that point, it goes to a peak E. I typed in, I can't remember. I actually thought I did work on this some time ago. So when maybe it was Jason that asked me about it some time ago and I did some work. Here's something that's very important. You start your buy signal and then go to a buy mode only from the lowest low. In this particular case, it's the low of 30.74 on the 14th of March. And then you have an extension to the upside, single leg A, and it pulls back. And then under it, it has, I haven't changed the colors, but it should be a gray peak, A and a B, because this is your starting point. So every single peak gets counted. Every single trough gets counted. A and B and again, and it pulls back. A, B, and again, it pulls back. And then it goes peak A from the low of 34 something or other. Tell you what it is right now. 32.12 on the 12th of May. And then I decided that from that low bar, I would give a left side, right side price time match, saying that there's a good chance that if you start to make higher highs and higher lows, there could very well be a peak A, B, C, D, all the way to the previous high, like a rectangle that turns into a nice cup or a bowl formation. And what does it do? It does exactly that. And on the 5th of July, it gets all the way to 60.36. It misses the high that was made of 65.27, but it gets real close, and it gets there in a shorter time frame, and now we're waiting, and then it double tops. Yesterday, double topped at 59.54, and now it pulls back. Now the 9-period moving average is still up above the 14, but turning down. The MACD is just about now crossing negative. The stochastic has gone from 80% to 75%. On balance volume is pulling back. And the relative strength, the little gray line there, is pulling back. And what I said, I think 2 days ago maybe, I dropped a note and said, it's holding very well. I'll do it the next day. And of course, I forgot about that. And now it's pulling back. So it's done very well. Even now, today, down 96 cents. Yes, it's a minus 1.77, which is bigger than the S&P decline. But look at that. It's just a little under the 14-period moving average. I like it, and I know that you had said that you had it. Let me just see. Can you out of tech companies that got hammered over the past year? GitLab seems to be one that is showing signs of new uptrend. So I agree. But remember, when we're looking at a comparison of its own price, and you look at the high that was made back on the 18th of March, that was at 65.27, and the high that was made about 8 sessions ago at on the 5th of July at 60.36. Here you can see that the MACD was holding very well. The stochastic was in the 80% area. Right now, it is pulling back, but in comparison, it's still holding in really well. So this is what I'm going to say. I thought that I read before that you actually had started a position. All right, let's do it as if you have no position. I'm looking at it just the first time you say, GTLB, what do you think? And in that case, I look at it completely fresh and say, would I buy, would I sell, would I not touch it at all? And in this case, I like it a lot. What I am going to do is I'm going to draw a rectangle formation. So if you draw a rectangle formation right here and say this is the containment area, I don't think you need to rush to get in. If you are in, and I think this might have been the thing that you were in earlier on, I would stay long this. I'd have a shorter term position that says if it closes under today's low of 51.54, I would take a little bit off. Why? Because we've seen a number of stocks in the software area that have acted very poorly after a very nice bounce percentage-wise from the low. After all, this did a 51% gain. That's amazing. No, it was about 52%. And now it's just consolidating. I like it very much. The 120-minute chart says, yeah, it probably could touch the 51 to 50 area again. I'm just saying that if you are long and you're just wondering what to do, when to add or when to subtract, would I buy it at this particular point? It would be on my list. It would be on my list as a potential buy. I wouldn't buy it right here because it's in a consolidation phase based on the rectangle formation. And I'd like to see how it handles 50. Let's call it 50.50. Let's call it 50. If it closes under 50, I'm going to say I have to wait a little bit. Now, what's really important is in the weekly chart, look at this. The weekly chart, this is your buy right here. And I should say this is the low. The low that was made the week of the 18th of March at 30.74. And when it came back, it never took it out. So this is like a dreaded H, successful H pattern that can go into a rectangle formation, making the M, a lowercase m. But if it closes at any point above the high, and that means if it closes at 58, let's say, in the next week or two, that's 5 points, 10% higher. That's going to be a really big positive for the daily and especially for the weekly. And that would start to improve the monthly. And that would say out of all the tech stocks that I've looked at, there are just a handful that are acting really well. after the big pullback, this is starting to act pretty good in the daily. The weekly needs work, and I'm just saying I would hold off. I would actually prefer to buy this a little bit higher rather than if it takes out that 50 level low. If it goes, the low that we're talking about here is this one right here at 49. No, it's 51.25. Yeah, 51.25. I'm going to keep saying between 51 and 50 is key support. That's the most important thing. I like it. Now, would I buy, would I sell? I'd wait. I'd wait for a day, another day or two. Today it's coming back nice. It's only down 18 cents. If GTLB is able to trade at, actually, even if it closes where it is right now by the end of the day or higher, I would say that I would start a position. If it's a brand new position, I would start a brand new position there. I'd have a 2-point stop and let it go where it wants to go because this is acting very well so far. I'll be back. The Dow's down 390.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, I'm just finished doing my chap wave notation on this particular stock, which is AFIB, but I had promised that I would do the TLT. For the TLT, trading down 25 cents at 114.85. You know what? Let's do this. I'm going to go to my triple yield chart. Haven't looked at that for a little while since I showed subscribers in my overview on Saturday. And let's see. There we go. So there are a couple of things that are going on right now. Number one is that yields are just kind of stuck. And being stuck, I guess, is important because you don't want them to go up very much more than they are already. You would prefer to see them come down so that we've got the grains coming down, oil coming down, and the yields coming down. And that should technically allow the market to move much higher. But look what we've got. This is the weekly chart of my triple yield chart. And we had that incredible leg F, which went to a peak F of 3.472%, 34.72. And that was about 7 weeks ago. And we've been pulling back ever since. That was where the cyan 5-year went above the 30-year. I mean, can you believe it? The 5-year T-note and the 10-year T-note went above. This is incredible action. But look what's happened since. It's in a digestive phase. That's important. I'm actually going to just expand this a little bit. There you are. So that you can see it better. But look what happened. The iShares Global Timber and Forestry ETF did the one-to-one propeller shaft to the downside, and it's sitting just above the 200-period exponential moving average at 73.16, down $1.14 today. And look at the HGX. This is the Philadelphia Housing Index, which is actually done this is pretty decent after all the stuff you read about housing. And I could give you stories and stories that I'm reading about houses. Suddenly, you've had the greatest increase in offers and suddenly the greatest decrease in the shortest period of time. It doesn't matter. The price says that from the low that was made 5 weeks ago, the Philadelphia Housing Index is rallying. It's still way below the 538 high. It's trading at 380 right now. It went down as low as the 340s, maybe the 330s. That's a huge decline. But I'm looking at this and I'm saying, I like what I see in terms, even with the CPI, because I think the yields have made some kind of a high and they're going to not maybe break down, but I think they're going to trade in a range. And that range says that it could be a containment area with the lows that were made the week of the 27th of May. That would be 30.7. So the low is 29.25 in the 30-year, 27.08 in the 10-year, 2.708, and 26.77, 2.677 in the 5-year. And that should really help the market. So on a very short-term basis, the reason why I wanted to stay long the Dow, I'm sorry that we just got stopped out of. I had fairly tight stops of our other positions in the two, the ARKK and the Qs, the TQQ that we had. They can always get back in if I want to. Let's see how the day closes. I'm not afraid of that, but I am looking at our stocks that we have, the actual stock positions. They are doing very well. They're plus. They're up nicely. So within that context, I think that you've got to consider that everything is separate. Now, the question came in, what about the TBT? Well, the TBT is the inverse. Can you explain the TBT? I can't explain the TBT. I can only tell you that it's an index I've followed for as long as it's been alive. On your show today, can you try to explain the TBT and stay cool? I am staying cool. But you know what? The TBT is just merely the mathematical formula of taking the TLT, which is the Lehman iShares 20-year Treasury Bond ETF, and inverting them. That's all it is. So when I look at the TBT, you're looking at almost, it's not an exact, but it's so close to a mirror image, a peak D in the Chapman wave. Remember, peak D is where other things can happen. That's where you got to expect a chance of a big pullback. You certainly got that back in May the 9th, where it hit 27.73. The TBT pulls back, rallies again, goes peak A, peak B, peak C, and peak D at 29.56. Chapman wave methodology says a buy signal to a buy mode should take you to at least a peak D. You can go higher, but D is where you raise your foot off the accelerator, hover over the brake to see what happens in the next 3 bars. Look what happened, plunges down from 29s to the 24s, and then it pops up. So I'm sorry, Paul, I'm not giving you an explanation. You'll have to Google that. All I can tell you is that it is almost the mirror image, and it's in a sell mode as I'm talking to you right now at 10:35 a.m. on Wednesday, the 13th of July. And there's a chance, At this point, I'm not going to give it an alternate count. I'm saying the chance that the weekly is at a peak F. The MACD is just about across negative. We've still got 2.5 days to go. Stochastic's way under 80% to 66. It seems to me that yields are going to be pulling back, but it doesn't tell you how far. It does say I could do my measured moves. Haven't done that here. Did I do it in the TLT, a measured move? No, I didn't. But the TLT, see this pattern here, the TLT is not a powerful buy signal to a buy mode. It says it's acting well, but there are no technicals other than the 9-period moving average over the 14, which is a good sign, and the MACD. But there isn't a thrust in a V-shaped pattern that says, wow, at 114.87, we should go over 118 for leg D. And then you've got yourself a pattern that I talk about very often here. I'll draw it in right there. That's the rectangle formation that forms a lopsided gravy cup. That's a real good technical term that you find in any good technical analysis book. The left side, right side gravy cup formation. Of course, you won't find it. That's just lopsided because it comes down sharply and then goes in a stair-step way, peak A, then peak B, peak C, and then a peak D, just under, right on, or just above the previous high, and that would be the high in the TLT of 119.74, 119.75 starts leg D. And all I can say is that if I'm looking at the two in mirror image, the TBT looks very much like it wants to form the dreaded H pattern. I guess I better do this because so many new listeners. Let me just do this. In the Chapman methodology, I've got 3 distinct patterns we look at all the time, and I'll go to them in the very short term, 1 minute chart or something like that in a moment. Up, straight down, number 1, cup formation, number 2, arch formation, number 3, and a mix of 1 and 2 or 1 and 3. This is 1 and 3, where you've got your arch formation, the dreaded H. If it takes out that left side low, it can actually go 1-to-1 to the downside from the arch high, which is usually at a peak A or a B minus because it fails. Look at that one there. After that peak D, it came down, ran up and failed, and it went all the way down. Not quite, yes, almost a 1-to-1 to the downside. Then it ran up to another peak ABCD to the 29.56 level. Dreaded H formation failed, and it went, it did. It went to 1-to-1. Now we're going to see, is this going to be a bullish pattern? The stochastic's improving. The MACD is still weak, but the histogram's improving. 9-period is still weak. And that's just saying to me that the TBT has a chance right now at this peak A that was just made to do an arch formation yet again and to pull back, and that'll help yields rally. Now we need to just quickly look at the BAC, Bank of America, made the lower low today, looking at the XLF. Why? Because the bank's going to have earnings coming in. Up back.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstad has 30-plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I want to say that the XLF, which is just so important to the overall market, you really don't want to see the XLF making highs right there in the 40s, slumping down to the 30 level, 31 level, and then just struggling. So you've got JP Morgan, you've got Bank of America, a whole bunch of the banks coming out with earnings this week. Is it this week or at least, I think, tomorrow. And that says to me, keep in mind that the banks need to be like the SMHs, the semiconductors. Remember, I talk about the semiconductors as being the crude oil of the 21st century. In other words, throughout the 1900s and the beginning of the 2000s, crude oil throughout the world was the generator of economic, well, we can say economic wealth, but really economic participation everywhere. It was just key to everything that was part of our growth. You've got, and then in the 1980s, it's obviously earlier than that, but I'm saying in the 1980s, the essence of the chip phenomenon became just a structural part of the economies around the world. Computers, cell phones, whatever it is, it just became automobiles now. It was like a handful of chips that were used in automobiles. Now, of course, it's just a major situation, especially the shortage. So to have this market be a really powerful market, I want to see the financials moving higher. I want to see the SMHs, SMH right now, trading, let me just type that in. I don't think I hit it in the right place. I'll be getting to your question in a moment on that AFIB. Look at this. SMH is coming back to the upper $1.61 at 205. I think there's a chance that what we're forming right now is yet another base of support for certain stocks, certain sectors to at least come off the lows and to attempt a rally. And I think that that's really important. So 3 things are absolutely current in my mind right now. One is by the beginning of next week, and I will be away next week, the beginning of next week, I want to see a much broader spectrum of sectors moving to the upside. This downside business has just got to stop. Do you hear me? Now, of course, nothing listens to any person, and I'm talking about that in a moment as well. I want to talk about Larry Williams, an incredible technician. But in the meantime, what I am going to say is that on a 1-minute basis, we've just got a leg E. I love what's going on, and that's the reason I was hoping to stay in some of our positions. I wish we had, but wishing is something separate. I also want to protect my subscribers as much as I could, and we've given them profits. It's just a small loss right now on one of our positions, but we're probably going to be getting back in. And most importantly, what I want to see is that despite the CPI this morning And I can assure you, I know firsthand of a couple of people that are just, they're looking at portfolios for the first time in a long time and just saying, I don't think I can take this. I just don't think I can take this anymore. And therefore, a lot of people will be getting out today. And I wouldn't be surprised if it's giving you yet another opportunity to be very selective, but pick your spots and pick what you've been looking at as something that you've desired to own for a long time. So within that context, we have a particular position that we've never owned. If it hits that number today, we could have got the low of the day. Even now, I could shoot out an email saying, hey, buy it at this level. I don't mind paying up for this particular stock. We've never owned it. It's one of the premier companies in the world. If we can get it at this particular point, and I can put a fairly wide stop on it, I think that there's a chance that we're going to participate in some kind of upside move there that will be a surprise to a lot of people. It'll help the Dow, it'll help the S&P, it'll help the NDX 100. It's in all of those. So I'm looking at things very objectively and just saying to subscribers, let's not be afraid. We know what we want to do. We want to put our money in specific areas, specific stocks, and specific, even within the sector itself, possibly maybe the leadership stock, one that's held up very well. So within that context, I don't feel unhappy at all about things. I am saying I'm still being very cautious for subscribers. There's no need to go out on a limb at all. There'll be plenty of time. Let's just say we made a pretty decent, another one of those a low, but not the low today. You're going to have plenty of these. I think there's enough bad news out there that we're going to constantly have sudden downside moves. And if we make higher lows and higher highs after each one of these, that's nice. You can trade those. That's a tradable position. I have no shorts at this particular time. I think we missed out the best time to be shorting. And even intraday, if you're short, that's one thing. But you've seen intraday long, intraday short. You have to have a 2 or 3 day perspective. So let's go back to AFIB, which is AFIB for Dan in the Den. Now, folks, the Den is a fantastic medium. Just any resource you want, anything you want to look at that you've never looked at before, just a wealth of information, even Tiger YouTube, just a lot of great things. Bank of Canada, again, hikes inflation forecast, slower growth, but no recession. Oh, that's interesting. Okay. Thank you, Pat, for that. Okay, let's go to and what I'm looking at 1.03. Now, this is not for everybody. This is a dollar stock. You know, you got yourself a dollar store. When you go to the dollar store, everything's now $3 or $4. That's the way things are. This is AFIB. It was in the 120 area 2.5 weeks ago, but it was also down below 50 cents 3 weeks ago. So it had a big spike, gap up. It filled only about 1/3 of the gap, maybe almost a half. And then it rallied off and it's trading at 1.05. It's in leg EF. Very quick, DEF in the 120-minute chart. This is this is the move that just accelerates right through the rest of the day and takes out the high that was made a week ago, about 7 sessions ago, at 1.05. If it takes that out, the high that was made at peak B at 122 on the 27th of June, that's going to be, and remember, in the Chapman methodology, this is your low bar right here. I'll give you a number in a moment, but this is your A, this is your gray A right here. This is another gray A. If there's a stalling here, and then we take out, or whatever happens, if you take out this high of 1.12, did I say it was? 1.15, that becomes gray A, gray B, and if it goes above 1.22, the high of the 27th of June, that becomes C. That's the way we do the Chapman wave. Every peak has its obligation to be counted, every trough. So in the meantime, this is and I can now put in an up arrow because the MACD is good, the 9 period is way over the 14, the stochastic is improving, it's not great, but the on-balance volume is a little stretched, but it's really strong. So the low that was made at 0.48 on the 16th, Wow, you've doubled, more than doubled, and that's a good sign. I like it very much. And your key support is at 0.91 on a very short-term basis. I hope that helps you. I'll be back in a moment. Basil Chapman, Dow's down 215, improving slowly, step by step.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges at which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back. Last segment, so let's just do this real quickly. I was asked about the HYG. This is the junk bonds. Trading sideways here, down 11 cents at 74. But the best one here is JNK, which is junk itself. The Spider Barclays high yield bond made a peak D in the Chapman Wave methodology, right there at about 110. I'll give you the exact price. This was the exact number. There it is. At 100. Oh, today's slow. I don't know why. Come on. You can do it. There. At 110.14 in September of 2021 is trading now at 90. These are bonds. I mean, a 10-12% correction in bonds, that is huge. Of course, a huge run-up, a spectacular run-up to peak D, beautiful arch formation. This is the period. I had a question yesterday about a stock that looked just like this. So remember, it can be stuck. Once it makes the H pattern, dreaded H, but holds the left side low, it can rally, and if it doesn't take out the left side high, it can stay in this position regardless of what the market does for a little while. So bonds are just stuck right now. That's what I was looking at the yields as well. Okay, so let me just do this quickly because I don't want to run out of time. Here we go. So in the so we've made a peak F in the 1 minute chart. We did make a peak G in the 2-minute chart and that spike just before the announcement of the CPI. Then we plunged. That was a peak D in the 10-minute. Remember peak D? This is a second peak D in the 10-minute chart that we had made since 3 this morning. Peak D plunges down, and now it's in a leg C. The MACD is good. The stochastic is still very at 37. It's not so good. But the 9-period moving average is just about to cross positive, and that'll be a good sign. Make it as simple as possible at 38.11. I can't believe I had it at 37.62. Put in. I was busy doing my newsletter. I had a 2-point stop loss stopped out, and there it is, 38.14. Anyway, if it at any point it manages to trade 38.18, that's 30, 200 units for each moving average coming back. Mike is right. This is going to be so. That's pretty spectacular. Have a great day. I'll be doing the news and